When the economy gets shaky, everyone's looking for a little bit of stability, right? Well, today, we're diving into an asset class that might just offer exactly that: senior living. Let's find out why it's considered such a solid anchor in today's economic storm. So why is senior living seen as this incredibly stable investment? Let's kick things off with our first point: its role as an anchor in the storm.
This is the big question, isn't it? It's on every investor's mind right now. In a world of so much economic uncertainty, with markets swinging like a pendulum, where can you possibly find a truly stable anchor for your portfolio?
Okay, so this slide really gets to the heart of it. Think about traditional real estate, like office buildings or retail shops. Their success really depends on things people can cut back on when money gets tight. That makes them super vulnerable to economic swings. But senior living? That's a whole different story. It's driven by a fundamental, non-discretionary need for care. And that creates a much more stable, predictable cash flow no matter what the broader economy is doing.
So, what's the engine driving all this stability? Well, it all comes down to one absolutely massive force: the demographic megatrend.
And you don't have to take my word for it. The economist Dr. Pooyan Ghamari puts it perfectly. He calls the aging population a macroeconomic signal of sustained, non-negotiable demand. Let that sink in. Non-negotiable. This isn't some temporary trend. It's a fundamental, long-term shift baked into our society.
And the scale of this shift? Wow, it's just massive. Look at this chart, the coming silver wave. You can see this steep, undeniable climb in the senior population all the way through 2050. This isn't a guess or a stock market projection. It's a demographic certainty. The demand for senior living is literally guaranteed to grow for decades to come.
And that's really the key thing to wrap your head around here. We're not talking about some market trend that could reverse next year. No, this is a fundamental human shift, and it's changing the very fabric of our society and our economy.
Okay, so we've got this demographic certainty, this unstoppable wave. But how does that actually translate into financial security for an investor? Well, that brings us right to our next section, the financial fortress.
The path to getting that predictable revenue is actually pretty straightforward. Here's how it works. It all starts with long-term leases signed with specialized healthcare operators. Then, the revenue is backed up by stable reimbursement models coming from both government programs and private pay. This structure basically insulates the cash flow from economic shocks, creating the one thing every investor dreams of: a reliable, predictable revenue stream.
This is what makes senior living a classic counter-cyclical asset. So what on earth does that mean? Let's just break it down. It's simply an asset whose performance isn't tied to the ups and downs of the broader economic cycle. Instead, its value is driven by consistent, non-discretionary needs. In this case, the absolute need for care.
And this model comes with some really powerful built-in financial shields. First, it has a low correlation with traditional real estate, which means it offers true diversification for a portfolio. Second, a lot of the leases are inflation-linked, which acts as a natural hedge against rising prices. And finally, because it's an essential service, it just fosters a high level of investor confidence.
But here's the thing. This isn't just about playing defense and being safe. It's also about a very strategic, very smart opportunity. And that takes us beyond just stability to what we're calling the smart play.
This chart, this tells a huge story. It shows where the real opportunity is. Sure, the luxury end of the market is pretty well served, but look at that massive slice, the mid-market. It's almost completely untapped. There is a huge undersupply of affordable, quality care for the vast majority of people. And this is the smart play. By focusing on and addressing this huge gap in the market, investors and developers can lock in a long-term, high-occupancy tenant base. You're meeting a massive, unmet need, and that is an incredibly powerful business position to be in.
And this is where it gets really compelling because it creates an investment with these amazing dual benefits. On one hand, you're tapping into a stable, growing market. But on the other, you're also addressing a critical social need for affordable care. This aligns perfectly with corporate social responsibility principles, and importantly, it attracts that mission-driven institutional capital that is always looking for investments that do good while also doing well. All right, so let's pull all these threads together now and look at the big picture takeaway.
Let's go back to Dr. Ghamari one last time, because he really nails it. He points out that the sector's inherent social utility also serves as a strong ethical component.
This just highlights that perfect alignment between the financial argument and the ethical one. Which brings us to our final thought. At the end of the day, this isn't just about numbers on a spreadsheet. It's about a deep, fundamental shift happening in our world. And it leaves us with a pretty powerful question to think about. As our world continues to age, is it possible that the most ethical investment is also the smartest?